Riverside Ranch. We have some guests with us today. We got Pete the Sasquatch and his beautiful significant other. Is it Robette? Is that right?
Correct, yes.
Okay, Robette and Pete are with us. So they are running a small farm in California, and they're getting ready to move out of state. And basically, they had contacted us on Instagram to talk about, some LLC basics, how to get your farm structured correctly. Let me just start off and say I'm not an accountant. I'm not a lawyer in any state. This is very broad advice, and so if you really want to get into the weeds on this, you really need to get with a good tax accountant and obviously with a good lawyer to kind of get things structured correctly. So this is just very broad. I don't want to call it advice because it's not advice. It's just how we have done things and how we've learned to do things. So that being said, how you guys doing tonight?
Yeah, we're doing great.
Awesome, thank you.
Yeah.
Thanks for having us.
Yeah, thanks for having us.
No, it's always fun to have people on and do the content and get to know people out there. So let's see. So you guys had emailed or had sent us some stuff on Instagram asking some questions. So I'll just let y'all get started. What's first? What's on your radar? What do you want to know about?
Go ahead.
Well, firstly, I would like to know about incorporating in another state from where you're operating.
Okay, so this is actually a little bit more complicated, but because it can change, the regulations can change state by state. As a general rule, you can incorporate actually in any state. A lot of people think you have to incorporate in your state, and as a general rule, you can incorporate it in any state. And to think about it this way, Walmart is not incorporated in every state. They have one incorporation. I believe theirs is out of Delaware because Delaware provides the best tax benefits. Nevada generally provides the best liability protection, and so that's why it's done that way. The problem with incorporating out of state is it makes the bookkeeping a little bit more of a headache. You generally have to file some type of foreign entity LLC paperwork with the state, so it can become a little bit more expensive. So if your state has reasonable liability protections and reasonable tax shelters, then it's worth it to file within your state, or in your case, that state that you're moving to. Just go ahead and I would potentially file it in the state that I'm moving to. And then right now in California, what you generally do is you'll file like a foreign entity operation thing, that whatever California's requirement is. Most of that information can be found on the Secretary of State's website. I think here in Alabama, I have to pay like $10 a year to do it. I'm sure in California it's 10,000, but whatever.
Yeah, it's pretty close to $1 million.
Yeah. So that could be a bit of a headache. But so if you're dealing with it short term, yeah, it's probably for y'all moving probably the easiest way to do it. But just realize that you're going to have to do a little bit of extra paperwork until you get things until you get moved to your final location. But that's probably going to be easier than trying to dissolve it in California and restart it up at whatever state you end up moving to.
Yeah,
okay.
Yeah.
Okay. So one of the things that my business lawyer told me, and the thing to remember, is that the federal government doesn't really care. The LLC is more of a state thing as far as the liability protection it gives you in the state taxes. From the federal government standpoint, it's like you're either a corporation or you're an LLC. You know what I mean? Like that's it. So and that's a very simplistic way to look at it because there obviously are more complications with it than that. But when you're talking about what are the advantages federally versus state and everything, you got to treat them as two separate entities. How does the state view this, and how does the federal government view this? And then the best thing that y'all are doing is making sure that you're getting your LLC, because that, for one, is going to give you all that liability protection. And then two, it's going to give you lots of good tax incentives to where you can write off a lot of your equipment. You can depreciate it over time. And again, that gets a lot more complicated. Oh, does that answer your question, Robette?
Yes, it
okay.
does. Thank you.
Yeah. Okay. So what else, guys? You had talked about, we had talked about some LLC basics when you and I were just talking offline just a few minutes ago, and we can kind of get into that as far as should you be doing an S corp, a C corp, an LLC, an LLP, sole proprietorship, basically, where do we go from here? And as a general rule, for small businesses, small farms, the LLC tends to be kind of the best all-around fit. The C corporation tends to be a better fit when you have when you're actually trying to establish an actual corporation with multiple members, it gets a lot more complicated tax-wise. The S Corp is when you're trying to structure a business that is going to be a full-time income. The thing to remember with an S Corp is you have to pay yourself a salary. So that's what gets people on the S Corp. And the IRS says that it has to be a reasonable salary, so it's up to you to decide, what's reasonable. But what we do for our inspection business is we just take the national average inspector income, and that's what we use as a reasonable salary. The rest of it we take in shareholder distributions. And so you have options like that to try to figure out, but you have to take a reasonable salary, and it's very loosely defined. And I guess it depends on whether the auditor had their coffee that morning. So for like our farm is an LLC. That made the most sense for us to do our farm as an LLC, because our farm, we don't make our primary income off of our farm. We make our primary income off of our other business. Our farm business, we pay ourselves one paycheck a year.
Yeah. Okay. That makes sense.
Okay.
Seems like it would be easier that one time a year. By the end of the year, it's either you pay yourself or you don't.
Yeah, and farms are a little bit different, because we've talked about when we've talked about on the channel that our budgeting for our farm is an annualized budget. So we don't pay things monthly, because farming, you may get 3 paychecks a year, depending on how you structure things. And the goal is to get to where you have multiple streams of income coming in every month. But when you're starting out, you may just have cattle to sell, or in y'all's case, you have sheep, and you may be taking the sheep to the market once a year. And so for farming is kind of an exception, because you really want your budget annualized instead of monthly. And so for us, that means that we're paying our insurance once a year. We're paying our gas, and we're buying our diesel fuel once a year. Or we usually buy that 3 times a year to keep it topped off, but we budget the item once a year. So you have to look at that for farms and see how you're going to budget that, and that also comes into what to do on the LLC side. Can you take a paycheck? Is this going to be your primary income? All that comes into play too. But again, usually the LLC just seems to be kind of the best fit for everybody. So if you're going to do a one-size-fits-all, that's definitely it.
Okay. Now, on the when you did the farm, did you get your LLC and all that set up before you got your animals and had your startup costs? Or
I should have. So no, I didn't. Steve Harvey did an interview years and years ago, and he said, make $5,000 and then worry about all that crap. And though that's probably not the best, legal and technical advice, from a practical standpoint, it makes a lot of sense. Make a little bit, get a little bit of cash flow coming in before you spend a bunch of time doing that. And so, like I said, you got to be very careful. Again, guys, this is not advice. We're not lawyers. We're not accountants. And so what I did is, we kind of started collecting up receipts and stuff as we went, and then right before the year ended, we said, hey, we're ready to file this, and so we filed our LLC there, so that way all the receipts and everything we could use counted towards that. But you got to remember, if I filed my LLC in 2021 and I bought my tractor in 2020, the tractor can't be a write-off then, and it doesn't get to be a write-off unless you bought it in 2021. So there's some complications there tax-wise on when you file that LLC. LLCs are generally so cheap to file, there's not much reason to kind of procrastinate it. For example, and so everybody wants to go pay a lawyer to set this up, right? And LLCs, the whole idea behind them was designed so you didn't have to go pay a lawyer for it. Most of the Secretary of State's websites will tell you how to set that up. And if you're just a single member or a husband and wife team setting up an LLC, then your operating agreement is far less important, right? So you need to download an operating agreement online, sign it, and you have it ready for an audit. Because it's not actually going to be used in court. You're using it just to have your books in order. If you're an LLC that's, for our home inspection business, where we have multiple owners, at that point in time, we have to have an LLC drafted by a lawyer and have something a little bit more articulate in there. But for our farm, our operating agreement, we downloaded online, and Mandolin and I signed it, and that was it. That's the bookkeeping for that. And so for the farm LLC, we just paid the minimum filing fee, which was $200 in the state of Alabama. I paid $28 for a name reservation, and it tells you on the instructions that you have to have that. You do have to understand and do a little bit of research on what kind of entity to set up. And again, that's where talking to a good business lawyer that does this for a living, if you just call them, a lot of times they'll give you that free consultation over the phone and tell you, no, you probably need an LLC or an LLP or an S Corp or C Corp, however, and they'll give you that advice on how to get that set up. And then that comes into, can you do what's called a series LLC in your state? I believe there's only 5 states that allow that right now, but something along those lines, which Alabama is one of those, and that's a really interesting product. If we can talk more about that later, but anyway, so the different types of LLCs that you can do, and so you need to get with a business attorney to figure that portion out, but you don't need to pay them $1,500 to go file it for you. All they're doing is filling out your name and taking it down to the SOS office.
Okay.
Well, we could do that all day long, right?
Yeah.
Actually, a lot of it's done online. I know my first one, I had to send it all into the probate judge here in Alabama. The first one I filed here in Alabama. And I learned this the hard way, guys. I went through that Nevada LLC filing corporation many, many years ago for my very first business, and I paid them like $2,500 to have them file my LLC. And then I realized that I got kind of scammed throughout that whole thing. And so they really didn't do much besides pay the $100 filing fee. And then you have to have, for a business, you have to have something called a registered agent, which is basically a person that is set up to always be able to accept official documents on your behalf. And so if you're ever served with a lawsuit, if they deliver it to that registered agent, it's delivered to the business. You can't then come back and say, oh, we never got the document. And so that's basically the whole purpose of that registered agent. You can pay a registered agent, a company to do it for you. A lot of law firms will do it, and they'll charge you like $500 a year, $100 a year, whatever it is. I don't know what the going rate is right now. Or you can do it yourself if you feel reasonably confident that they'll be able to access you during business hours. They have to be able to pretty much get to you all the time during business hours.
Yeah. Huh.
Okay.
Interesting.
Yeah, it's most people just elect to do their registered agent themselves. I think if I remember right, for our I've got this all written down in our business plan, but I think our registered agent for our home inspection company is actually our accountant's office, and then that way, if it's tax forms or something like that needs to go through the registered agent, it just goes directly to her.
Okay.
Wow. Okay. Yeah, it doesn't sound too painful.
No, it's really not that complicated from the standpoint of the Secretary of State's website will have a list of things that you need. Like I said, here in Alabama, you have to have a name reservation beforehand. So you have to go and make sure nobody's using that name, and then you can file it, and then you own the name. And it allows you, and you pay $28 and you own it for that year. And then after that, it's, file your SOS, and then you move on to the EIN. So the EIN is kind of your next thing.
Yeah. 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 We just talked about that today, about the EIN and
Right. Which I haven't gotten.
Yeah.
Yeah. So, and we can roll right into that then. The EIN is, and for those of you watching that don't know, the EIN is basically a business social security number. And so you're going to get this private number, and don't lose it because it's a real pain to try to get back later on. But you go to the IRS's website and you can file for it right there. You can have your EIN in 2 minutes. It doesn't take long to do. And last time I did it, it was free. I don't think they've changed that. So, or if it does cost you anything, it's very, very minimal. But I'm pretty sure it was free. And you go get your EIN, and at that point in time, your entity from the IRS's standpoint is a standalone entity, and it'll be treated as such during your taxes and everything. And so, if you have the LLC but not the EIN, you probably will pierce the corporate veil on your liability protection, but also from a tax standpoint, they don't treat you as two separate things.
So you get the EIN number first before you do the LLC.
I want to say, and there may be a technical answer here. Like I said, I'm not a lawyer, I'm not an accountant, so I really don't know. The way I've done it in the past is I've always kind of just done them on the same day, where I filed my LLC and then I went and got my EIN and called it good. I don't know if there's a technical answer on which one needs to come first, but I would say I would make a guess that probably the LLC does, but I don't know that it matters that much. I would just plan on doing them both at the same time.
Yeah, would be the smart thing. Yeah, possibly.
So, and then the EIN, that's when you can start, because that's when you'll have a separate tax return that goes with your business. And that's when you can really start, writing things off. That's when you can go get a bank account, makes your your tax is a lot easier at the end of the year if you have a bank account and you can say, you can just simply go to there, print out your sheet, and find all your checks and everything. It's all under there, all the transactions for the business, and it, from your liability standpoint, tends to put you in a little bit better category because from the way that my lawyers have explained it to me is, you get the liability protection with the business, but if that business is treated as an extension of yourself, then they can pierce the corporate veil on them, and in which case somebody can come after your personal assets if you're sued. And so the way that my lawyers have always told me is that you want to separate everything as much as possible and run it as if you were running Walmart. Walmart CEOs don't, they're not using the Walmart business card to buy their groceries and stuff like that. So, so more than just from a tax issue of, well, that's not an expense that you can write off, and now you have to pay back taxes if you get audited. It's an issue of some of your liability can be significantly impacted with it.
Yeah, it's a lot of good info.
Okay, but I'm just going to ask you this question. It's like, because you talk about your lawyers and stuff that advise you, and how did you go about finding those professionals to help you? I mean, we have some. We have some out here, but it gets very expensive.
Yeah, and that's that's another tricky thing. So there's networking groups available, and you got to realize that a lot of different businesses, so accountants, lawyers, home inspection, real estate, stuff like that, they do these things called these networking groups, and small farms could benefit from them if they take advantage of it. But there's something called a BNI, if you're familiar with that, which is Business Networking International. And though I'm not a huge fan of that business,
I've heard of it before.
Yeah, they're very cultish, so I don't always like the business group. But we're always, at some point in time, portions of our business are always in one because they are beneficial and they do bring in income. But one of the things that it does more than bringing in income and having somebody referring to your business is that it allows you to meet these professionals and get connected with other people that are doing what you either going through what you've done, so you can ask them, hey, what lawyers are you using? I know for us, we have several lawyers that I talk to at any given time. And I had one that this is all he specialized in was business development. And then I have another he's a tax attorney, and he's got an accounting degree for his undergrad. Then he went on to Harvard for his law school, and then he decided after he got done with law school to go get an MBA. So the he's just very brilliant, knows everything about all of this stuff, how it all works together, and he's got the the ideal resume for what you're kind of looking for on that stuff, and he charges accordingly. So it's not always
by the second, right? By the second.
Yeah. So it's it's one of those things where you have to do a little bit of digging around. You're not probably going to find them on Google. Let me just put it that way. Chances are that the Wettermark Keith or whatever it is, that Alexander Shannara's out there, those aren't the lawyers you're looking for. You're looking for lawyers that specialize in your tax law, or they specialize in business development and business startups. And again, you're going to have a hard time finding them on the internet. So the way that I would go about finding them is I would talk to local small business owners, people that have been where you are, because they'll know who to call. Like I said, I've got 2 in my phone at any given time that I can call. Actually 3. One of them that's not his specialty, but he can do it as a generic lawyer. And but I've got a couple on my phone at any given time so if somebody comes and asks me in Birmingham, hey, who do you use? It's like, here's who I'm using. Call him.
Yeah.
Okay, great.
It's a lot of good starting points.
Yeah.
Yeah, and that's having a lawyer and an accountant in your corner before. And again, because all this that we're talking about can change a little bit state to state. The government, changes, day to day, and they can decide that they want something different. And
right.
And so it's just this whole system that's kind of not set up in your favor. Let me put it that way. So you got to kind of work.
Yeah, the state that we're in is they like to create things and make things up as they go.
Yeah.
And then you got to really backtrack and tell them, no, you can't. No, that's not right.
Yeah.
But there's a lot of homework involved.
Yeah, there really is. That's why I say I'm being very careful to say this is not advice. This is just what we have done. If you are getting ready to start a business, get with a lawyer and get with an accountant that are familiar with doing this, so that you can properly get your stuff set up. And so like, that was kind of the next thing is who to talk to. We had talked about that prior to this. Is like, how do you find your next one is your accountant? And I would look at that the same way. And whenever I made my business plans, that was one of the things that I put in place in my business plan. It's written in there who my registered agent is, who my accountant is, and who our business attorney is. And that it's got the contact information for them. So anybody that works for our company that has access to that to our business plan can come in there and say, okay, here's who to contact in this situation.
Yeah, sounds like a smart
right
move or idea plan.
Right.
Yeah.
Okay.
Very.
Well, it definitely gives me something to start with.
Yeah.
On
I got a good paperwork
venture.
gal here.
On a little venture.
Yeah.
Of farming venture.
We've had many adventures.
Well, realize with farming, the one thing about farming is that the farming, the little code that your accountant will put in your paperwork, it tends to trigger audits, and it triggers audits because a lot of people take advantage of it, and they what they'll do is they'll call themselves a farm so they can write off their new $50,000 truck or whatever it is they do, and whatever toy they wanted for their little hobby farm, and you have to actually run it like a business. And that doesn't mean that you need to make a profit the first year. So a lot of businesses won't make a profit for several years or won't show a profit for several years. But it does mean that within 3 to 4 years, you better be showing some money coming in and having some proof of that. So it's one of those things that's what Lynn and I, we look at whenever we set up a new business is this a business or is this a hobby? Because I don't want to do something just to get the tax write-offs. That's you're asking for trouble if you're doing that. There are so many legitimate tax write-offs if you just do things correctly that there's no need to try to scam the system. So many things are tax deductible that we purchase that there's just no need to try to go around it.
Yeah. There's definitely a lot of things that you could follow that you could take advantage of anyway without trying to hide anything.
Yeah, and we were talking about Economic Ninja before this started, and he did something on that the other day. I don't know if you saw that, where he's talking about somebody buying a truck and wanting to put in false information for the price of the truck. And,
right. Who would do that?
Yeah. Well, but he had a valid point. You're buying this for a business. You're better off taking the write-off and the depreciation of the full value of it rather than just saving yourself $100 to go register it. And again, I guess, he's in California. Y'all are in California. That may be different there because your registration fees are a lot more than mine. I pay like $40 a year to register my trucks. It costs me like $200 a year to do all of our fleet vehicles.
Yeah, that's kind of disgusting.
Yeah, it is. Yeah. we won't tell you what it costs us.
Yeah, we're pushing 4 digits.
Oh my gosh! Yeah, that's like my dad when he was in Colorado. I think his truck was like $1,300 a year to register his truck. It's like, oh my gosh.
Oh my gosh.
Yeah, they get you for the weight.
Coming and going.
Yep.
Yeah. Well, and I know Dad's was, they had the emission test on there too, and so that's another $200 on top of it. You know what I mean? Like all this, it just everything adds up on there. So, and here we've got our fleet vehicles, our trailers, everything. I mean, most of my trailers are like $11.
Yeah, that's oh my gosh. Maybe we need to move to Alabama.
What's the shirt that don't California my Alabama?
Oh yeah.
Hey, wait.
No, that wouldn't be in the plan.
That would not be us.
We're pretty good neighbors.
For business startup, Alabama's actually been a very good state, and there's a lot of states out there that have good advantages because it behooves the states to write up their bylaws in a way that it benefits people to come in there and bring businesses into them. For years, my dad ran a business in Idaho. He was a doctor, so he had a small town practice in Idaho. And that I remember him always upset about the way that Idaho did that because Idaho had so many regulations on their LLCs that he always felt like it would have been better off if they just incorporated in another state, even dealing with the out-of-state stuff because Idaho made it so difficult. And so you really have to look at the state and look at the benefits of each one of them. Like I said, certain states are better than others, but as long as your state is good enough, then I would take whatever state you're living in rather than dealing with filing the foreign LLC fees and everything. Creates a whole hassle of other issues if you're dealing with that.
Yeah.
And more expenses.
Yeah.
Yeah, that's been the thing is the balance on the expenses on incorporating in another state and operating as a foreign entity here, from kind of what I've gathered, you have to really pay attention because sometimes you have to file dual tax returns, you have dual fees. There's a lot more to it, but California is one of the most expensive places to incorporate.
Yeah.
So,
well, that's why you're
seeing weigh everything out.
That's why you're seeing businesses leaving California hand over fist.
Oh, really?
Yeah.
Can't imagine why.
Yeah, huh?
That makes sense. Well, anyways, guys, did y'all have anything else, I guess, before we close this out?
No, I think that covered it for me. At least gives me a good start, knowing what you did, kind of what your experiences are, at least gives me some idea of where to go.
Yeah, start digging around and getting more educated and getting opinions and.
Yeah, man, and like I said, this is just what we have found has worked well for us. We do, you'll find with accountants, the one thing with accountants is that some accountants are very conservative on what a write-off is, and some of them are very liberal. And you want to be somewhere in the middle, because liberal, being very liberal with it tends to trigger audits and stuff like that. And so, and not that you necessarily want to be scared of an audit, because as a small business owner, it's probably inevitable. But you certainly don't want to be liberal with your write-offs and then have an audit, because you're going to end up with a big bill afterwards, and you're going to be holding the bag for that. And so the goal is to get through an audit with a minimal bill, right? Because they're going to gig you for something. It doesn't matter how conservative an accountant you have; they're going to hit you with something. Right. So the goal is to get out with as small a bill as possible.
Yeah.
All right, cool deal.
There's always going to be a bill.
Yeah. I appreciate your time.
Yeah, we definitely appreciate you.
Thanks for calling in, guys. I really appreciate it, and this is always fun. So, y'all, if you have any questions or anything that you want to see us talk about on the channel, please post it down in the comments. You can hit Amanda Lynn up on Instagram. Ironside Ranch LLC at gmail.com is a great way to get a hold of us. Other than that, we will catch y'all next time.